did you make of these numbers over the weekend? Inflation was the biggie, wasn't it? 6.4%, above 6.2%, and that trade surplus widening.
Yeah, well, you know, the inflation number is higher than expected, and certainly not what the trend is telling us. If you look at the money supply growth, which are normally used to correlate with inflation numbers, it should have come down, but it hasn't. And I guess, you know, there are lots of one-off factors here. And what happened in Japan in the, in March, the earthquake, the nuclear crisis and all that, would have some disruptions on the global supply chain, on the food supply, and I guess that has some impact on the prices. And commodity prices were very high, and that obviously also sort of caused a jerk up in the inflation rate. But going forward with a soft patch in the external economy, with, you know, money supply growth half of what it was at the peak, and also with you know, disruptions in the supply chain from Japan, kind of, you know, slowly going back to normal, I would expect some sort of easing off of inflation rate towards the end.
Everybody says that. They also talk about base effects here because the high price rises come in last year and the comparatives become more favourable when it comes to inflation. But, you know, the PPI level, that's giving us an idea. The producer price figure, the factory gate price, that gives us a forward view on that. And that was also way higher than expected, 7.1% there.
Well, you know, there's also some QE2 effects still sort of lingering there. June, you know, there's still some QE2 effect, you know, and that, after that we don't have any more quantitative easing, maybe not for a while. Commodity prices have come down sharply in the last month or two. I mean, it's a slight pickup now, but you know, that is a big thing because China imports a lot of raw materials and commodities for various uses, you know, and production and real estate and infrastructure and all that. So that is a big thing. If commodity prices ease, it will help in the inflation rate.
Yeah, then Connie, we come to the growth side of things, and we have the trade data. Is that good? Is it a good guide for looking forward towards these figures later this week? Because we had this widening surplus that was down to fewer or less value of imports.
Well, you know, the trade surplus widening mainly is because of lower imports. But the exports number are not very strong. I mean, it's like about 19%, 18%, yeah, versus 20-something% before. So I would expect growth number to come down, say around about 9 to 9.3%. But we mustn't be too alarmed by that because this is exactly what the Chinese government is looking forward to do, because they wanted to bring down the growth rate and they want to improve the value-added, you know, side of the growth. Quality rather than quantity. So, you know, and this is, you know, what they're trying to do. So, if you look for, you know, look at a slower number, it's actually not a bad thing.
Right. So, what are you looking for when that GDP number does come out?
I'd say at 9 to 9.3%, you know, in that range.
You can hardly call that slow, can you, really? I mean, compared to what we've had, though, with double-digit, 12, 13%.
I think Chinese government will be happier if it's 8% or even no target at all. But
because they say that they want qualitative and not quantitative growth.
Yeah, but that will take a long time, you know, because what they're trying to do will take at least, you know, few years in the new five-year plan. They're trying to bring up all sorts of technology content, environmental content in the growth. So not sort of like achievable in a few months, you know, but, you know, over time we'll see some difference. And a slower growth number should not be an alarming thing to people. But 9% is respectable. We
can't leave this without talking about the RMB, the yuan as well. Where does it appreciate to, if at all, this year?
You know, I think the renminbi's appreciation will continue, but very gradual. Don't look for a sharp appreciation. They need it for the to bring down the imported inflation. But on the other hand, they can't really have a very fast appreciation, or else there will be lots of capital inflow, and that will sort of jack up the other side of the inflation. So it's a sort of a very tricky balancing act here.
Very quick question, Connie. It's about Hong Kong. Over the weekend, the basic taxi fare went up from $18 to $20. What inflation impact does that have?
Tax effect?
The taxi fare, yes.
Well, I mean, obviously, you know, inflation is a big thing here now. I don't expect it to come down. Well, taxi, yeah, I mean, it is expensive. I actually took a taxi from the airport when I came back from... but, you know, a longer journey is actually better.
Yeah, exactly. You'll be taking the train the next time, I'm sure.
Inflation expectation is going to stay here. It's not going to go away. Weak US dollar, weak Hong Kong dollar.
Yep, because they're tied, aren't they? Thanks a lot for that, Connie. Just got to